It just happened. And you need to get ready right now, because what's unfolding at this exact moment could reshape the next decade of crypto wealth. The biggest institutions on the planet are making their move. BlackRock is no longer hinting. They're saying it out loud. Tokenization of real-world assets is officially on the table. And when the largest asset manager on Earth starts talking like that, you better believe they're already positioned behind the scenes to profit from it. This isn't financial advice. Right now, the demand for the Federal Reserve's reverse repo facility, the RRP, has fallen to just $4.1 billion, the lowest level since April 2021. That number matters because the RRP is one of the key gauges of excess liquidity in the system. It tells us how much spare cash is sitting on the sidelines. And when that figure collapses, it means liquidity, the oxygen of the entire financial market, is about to shift back in. Think back to the last time liquidity was at an all-time high. Late 2021, early 2022. What happened? Bitcoin hit record highs. Ethereum hit record highs. XRP was ripping. Altcoins across the board. Solana, Avalanche, BNB. Everything was going vertical. That was when money was abundant, when liquidity was flooding the system. Then the Fed pulled it back, and everything dropped. It was brutal. But here's the key. This liquidity cycle is turning again. And when that turn happens, history says it's explosive for crypto, especially XRP. Before we go deeper into that, if you want to understand exactly how top investors are positioning themselves for this next crypto wealth wave, especially centered around XRP, then check out the XRP Millionaire Blueprint. It's a complete guide that includes a document, an infographic, a video, and more. Everything designed to give you clarity, confidence, and a real roadmap to move smarter in this next leg of the market. You'll find the XRP Millionaire Blueprint linked in the pinned comment below this video. Now, let's break down why this moment is so powerful. Technically, in the United States, quantitative tightening has never really stopped. Liquidity has been squeezed for over a year now. The US is the last major economy still holding the brakes, while countries like China, Europe, Canada, and Australia have already started printing again. But the US can't hold off much longer. We're at the point where liquidity in the banking system is dangerously tight. If the Fed doesn't step in soon, the risk of bank collapses skyrockets. So what happens next? The Fed turns the printer back on. That's when we see the real fireworks. Because once trillions of dollars flood back into the system, they don't just stay in traditional markets. They flow everywhere. Into gold, into stocks, and yes, into crypto. Every major bull run in Bitcoin and XRP history has started the same way, with liquidity injections. And right now, we're setting up for one of the largest injections of this decade. Take a look at what's happening with gold. Gold futures just crossed $4,300 an ounce for the first time ever, up over 60% in 2025 alone. That's not just a random milestone. Gold is the leading indicator. It always moves first. It tells us where the capital is flowing before everything else reacts. In every single previous cycle, when gold broke all-time highs, crypto followed. Sometimes it takes a few weeks, sometimes a month or two, but it happens. And while the average investor is still panicking, the big money is preparing. Hedge funds are dumping equities. Over $3 billion in sales last week alone, the fourth straight week of outflows. That sounds scary to most people, but it's actually a repeat of 2008. The fear, the panic, the uncertainty, those are the exact conditions that preceded the last generational bottom. After 2008, when the banks got bailed out and money printing began, the market exploded. Stocks went on a decade-long bull run. Bitcoin was born right after that. We're seeing the same setup right now. And remember the XRP flash crash we just saw this year, down to 120. That was brutal for a lot of people, emotionally. But if you managed to buy during that dip, you caught what could go down as one of the best entry points of the decade. Even right now, prices are still highly attractive when you understand what's about to happen with liquidity. Globally, M2 money supply, the total pool of money circulating in the economy, has been climbing again. Not in the US yet, but worldwide. Europe is printing. China is printing. Canada is printing. That's why crypto hasn't crashed completely. The world is adding liquidity while the US holds off. But the moment the US joins in, it's game on. Think about the scale of the US economy. Entire countries have GDPs smaller than single US states. When the dollar expands, it shakes the entire global system. And in crypto, where over 99% of all transactions are still in US dollar stablecoins, that means everything is priced relative to that dollar. When the dollar gets devalued, assets like Bitcoin and XRP naturally explode upward in dollar terms. So yes, there might still be short-term volatility. XRP might dip to 120 again. It might chop sideways. But when the Fed pivots, when that liquidity floodgate opens, it's going to hit fast and hard. And it won't matter whether that's December, January, or February. Whether it's 2 months or 6 months from now, the window is short and the upside is massive. This is the part where most people make the biggest mistake. They panic at the bottom. They sell when fear is peaking instead of recognizing that this is exactly what the smart money waits for. Look at 2020, look at 2018, look at 2015. It's always the same story. Meanwhile, the biggest institutional players are moving. BlackRock, Fidelity, Franklin Templeton, they're not waiting for approval from anyone. They're building the next generation of financial infrastructure right now, and it's built on crypto rails. And this is where it gets even more exciting for XRP holders. Between October 18th and October 25th, we're entering a key approval window for XRP-based ETFs. According to Bloomberg data, the odds of approval sit between 95% to 100%, with major names like Grayscale and Bitwise in line. Even if the ongoing government shutdown delays the decision a few days into early November, it doesn't change the inevitable. Once those ETF inflows begin, it's over. The liquidity flood will meet the new infrastructure head-on. Now combine that with what Larry Fink, the CEO of BlackRock, just said this week. This is monumental. He said, and I quote, "We're just at the beginning of the tokenization of all assets, from real estate to equities to bonds." He's talking about turning everything we know, stocks, properties, even ETFs, into tokenized, blockchain-based assets. And this is where it clicks for XRP. BlackRock isn't doing this alone. They're working with Securitize, and Securitize is partnered with Ripple. These partnerships are what will power tokenized real-world assets. Imagine owning 0.1% of a skyscraper and earning yield from rent payments. Imagine owning a fractional share of a luxury property or an Airbnb that generates income daily, and those profits instantly show up in your wallet. That's what tokenization means. And guess what powers those transactions? Liquidity bridges, settlement rails, instant transfer systems. The exact type of technology XRP was built to deliver. BlackRock knows this, Ripple knows this, and they're already in position. This is the trillion-dollar shift happening quietly while the public worries about short-term charts. So when Larry Fink says they're preparing to tokenize ETFs, bonds, and real estate, he's describing the future financial system. And the plumbing of that system is being built on blockchain rails connected to projects like XRP. We are witnessing the financial internet being assembled in real time. And it's happening at the exact moment the Fed is cornered into flipping from tightening to easing. The liquidity flood is coming, and the infrastructure to catch it is already in place. Now, we're not even done yet, because the real acceleration starts once the ETFs go live and that institutional money starts flowing directly into tokenized assets. That's when the system locks in and XRP's utility narrative becomes reality. That's the exact moment when everything changes. When those ETFs get the green light and the first real inflows start to hit, the narrative around XRP shifts from speculative to structural. It stops being just a crypto play and becomes the digital plumbing that global institutions are quietly building around. Think about what that means. For the last decade, the crypto market has been built mostly on retail energy, traders, investors, enthusiasts. But this next wave is different. This is institutional infrastructure. It's about payment settlement between central banks, cross-border liquidity for trillions in daily transactions, and the tokenization of real-world assets. XRP was designed for exactly that purpose. When BlackRock, Securitize, and Ripple are working together, that's not a coincidence. It's an alignment of incentives. BlackRock wants faster settlement and more liquidity. Ripple provides the rails. Securitize builds the structure for fractional ownership. When those three pieces connect, you get a global ecosystem where trillions of dollars in assets move frictionlessly across networks in seconds. And that's what's quietly forming beneath the surface right now. While everyone's distracted by short-term volatility, the architecture for the next financial era is being laid brick by brick. This is why XRP's positioning matters more than its short-term price movement. The market is emotional, but the infrastructure is logical. The infrastructure doesn't care if XRP is 1 to 20 or 12, it's being built either way. Now let's talk about something critical, the liquidity switch. Every time in history that the Fed has gone from tightening to easing, risk assets have exploded. We saw it after 2008, after 2020, and we're about to see it again. What most people miss is that liquidity moves first, before the narrative, before the headlines, before the crowd realizes what's happening. By the time CNBC starts talking about crypto making a comeback, the smart money is already sitting in position. That's why right now is the quiet accumulation phase. Look at what's happening in the macro data. Inflation is trending down faster than expected. Manufacturing output is softening. Job openings are declining. All the signals that give the Fed permission to pivot are lining up. The bond market knows it. The 10-year yield has started rolling over. That's the early warning sign that rate cuts are coming. And when those cuts start, it's not just about cheaper borrowing, it's about liquidity returning to the system. Every dollar that flows back in has to find a home. Bonds, equities, commodities, and increasingly, digital assets. Crypto sits at the perfect intersection of liquidity and growth potential. It's small enough to move fast, but big enough to attract serious capital. And XRP, being positioned at the heart of cross-border settlement and tokenization, is a direct beneficiary of that flow. Here's what's even more fascinating. The global M2 money supply is already expanding again. The US might not have officially pivoted yet, but other countries are way ahead. China has been adding liquidity aggressively. The European Central Bank has been quietly easing through asset reinvestments. Even Japan, after decades of deflationary policy, is injecting capital back into the system. All of this means global liquidity is already turning. Now combine that with the coming US pivot, and you have a synchronized global expansion of money supply. That's rare. It doesn't happen often. And every single time it has, assets like gold, Bitcoin, and XRP have ripped higher. That's why this setup is so special. We're at a confluence of three major forces: liquidity turning positive globally, institutional infrastructure being built for tokenized assets, regulatory clarity converging for XRP. Those three together are the perfect storm. The average investor focuses only on the chart. The smart investor looks at where the money is moving. And right now, the money is aligning behind tokenization. Larry Fink isn't talking about this because it's trendy. He's talking about it because BlackRock plans decades ahead. They're seeing what's coming. A world where traditional finance merges with blockchain rails. And XRP's role in that system is not about hype. It's about utility. Picture this. A European pension fund wants exposure to US real estate. Instead of going through a slow, paperwork-heavy process, they simply buy a tokenized portion of a commercial building in New York, instantly, securely, and in compliance with all regulations. The transfer settles on-chain using XRP as a bridge asset between euro and dollar-based stablecoins. Settlement happens in seconds, not days. Fees are minimal. The transaction is recorded transparently. That's the future BlackRock and Ripple are co-architecting. Now think about scale. The global real estate market alone is estimated at over 300 trillion. Even if a fraction of that becomes tokenized, that's tens of trillions moving through blockchain systems. Add in equities, bonds, and private assets, And you're looking at a multi-hundred-trillion-dollar network. Do you realize what happens when even 1% of that touches XRP's rails? That's more volume than the entire crypto market sees in a year. And that's not theoretical. It's already beginning. Securitize has already tokenized corporate bonds for major companies. They're running pilot programs that are proving real yield, real settlement, and real regulatory compliance on-chain. Ripple has been building central bank digital currency, CBDC, partnerships around the world, from Europe to Asia to the Middle East. All of that ties into this broader system. This is why the smart money is so calm. They see what's coming. Meanwhile, retail investors are still trapped in the cycle of fear, watching price charts tick up and down. But this is how every major wealth transfer begins. Quietly, under the radar, while most people are looking the other way. The real opportunity isn't just in buying XRP, it's in understanding why XRP matters at this exact point in history. Liquidity, tokenization, and digital settlement are the three pillars of the next financial cycle. And all three lead directly to Ripple's technology. That's why the ETF approvals are such a pivotal moment. Because once institutional investors have a regulated vehicle to get exposure to XRP, it opens the floodgates for capital that was previously sidelined. Pension funds, hedge funds, sovereign wealth funds. They can't just go buy tokens on an exchange. But an ETF? That's their door in. And once that door opens, the demand side of the equation changes forever. At the same time, supply is constrained. Remember, XRP's total supply is capped at 100 billion coins, with a significant portion already locked up or held long-term. As utility demand ramps up and institutional investment begins, simple math takes over. Fixed supply, rising demand. It's the same dynamic that's driven every major asset breakout in history. We've seen this before with Bitcoin's halving cycles. We've seen it with Ethereum's burn mechanism. Now we're about to see it with XRP's real-world utility expansion. And here's the kicker. This isn't just about price appreciation. This is about integration. When a digital asset becomes embedded in the core infrastructure of the financial system, it's not just another speculative trade. It becomes part of the machinery. Once that happens, it's not going away. We're already seeing the early stages of this in the banking sector. Major institutions are experimenting with on-chain settlement systems powered by distributed ledger technology. RippleNet and its on-demand liquidity, ODL solution, have processed billions in transactions. Each year, more corridors open. Each year, more institutions test and adopt. This is what a slow-motion revolution looks like. It doesn't happen overnight. It's not announced in a single headline. It builds over time. Then one day, it's everywhere. The same people who said crypto is a fad are now the ones building ETF products and tokenization frameworks. The same institutions that once dismissed XRP are now exploring how to use its infrastructure to move real value across borders. That's why you can't just watch the surface. You have to look beneath it, to the trends that are invisible to the crowd, but obvious to those who study capital flow. And those flows are converging. Liquidity expansion, institutional integration, regulatory alignment. Each one of those by itself is bullish. Together, they're transformative. The world is moving toward a digitized, tokenized economy, and XRP sits right in the middle of that intersection, acting as the bridge between traditional finance and blockchain-based settlement. The setup is clear. The timing is tight. The window is short. But for those who can zoom out and see the pattern, everything is lining up almost perfectly. And the craziest part? We're still early. Because when this infrastructure goes live, when tokenized ETFs start trading, when central banks begin using blockchain rails, when liquidity injections start fueling the system again, the XRP narrative won't be what if, it'll be how far can this go. When this new system fully activates, it won't look like the wild, unregulated crypto markets of the past. It'll look polished, institutional, and global, because it will be global finance. That's where we're heading. A world where blockchain isn't just an industry, it's the foundation of money movement, asset ownership, and capital markets. and XRP is positioned right at the center of that transition. Every few decades, there's a reset in the financial system. The 1970s brought us fiat currency. The 1990s brought the internet. The 2020s are bringing tokenization. And this time, value itself is going digital. What we're watching right now is the early framework for how trillions will move across borders in real time. Ripple has been preparing for this moment for years. The partnerships with central banks, payment providers, and global corporations were never just nice press releases. They were strategic groundwork for a world where instant, low-cost settlement isn't optional. It's expected. Now, layer that over what's coming next, the global liquidity unlock. Once the US joins the rest of the world in turning the monetary taps back on, every major asset class will reprice. Stocks, gold, and real estate will surge, but crypto will move faster. Because while the traditional markets grind higher with policy shifts, crypto responds immediately. It's a pure liquidity asset class. And when you match that with institutional infrastructure, like the XRP ETFs set to be approved, suddenly crypto isn't the alternative anymore. It becomes the front line of capital expansion. This is why the big money is preparing now. Behind the scenes, the shift is undeniable. Major banks that once mocked blockchain are now investing billions into digital asset infrastructure. Governments are quietly forming tokenization task forces, mapping how to bring real-world assets on-chain. Even global payment networks are piloting instant settlement systems that look almost identical to what Ripple built years ago. The old guard isn't ignoring blockchain anymore. They're rebuilding their systems on it. And when you connect all the dots, it becomes crystal clear. We're heading toward one inevitable destination. The future of money is instant, borderless, and fully powered by digital liquidity. The transition won't be dramatic. It'll be subtle at first. A few pilot programs, a few tokenized bonds, a handful of ETFs. But it will compound fast. Once the efficiency gap becomes too large to ignore, every major player will migrate over. Because why would anyone stick with a 3-day settlement system when blockchain offers it in 3 seconds? And that's when XRP's purpose becomes undeniable. The same way the internet quietly absorbed every industry, from media to communication to retail, blockchain is about to absorb finance. The assets themselves will change form. Ownership will be recorded digitally. Transfers will be automated, and liquidity will become borderless. XRP's role in that structure is to connect those pieces, bridging fiat and crypto liquidity pools at scale. The key isn't whether that happens, it's when. Because if you're paying attention, all the signals are flashing green. Global liquidity is turning. Institutional access is opening. Tokenization pilots are scaling. And XRP sits right at the intersection of those 3 forces. That's the moment we're entering now. The start of a liquidity supercycle that could redefine the value of every digital asset on the planet. And just like every major wealth transition in history, it won't feel comfortable. The charts won't look easy. The media won't tell you it's time. But by the time the headlines catch up, the smart money will already be positioned. And they're positioning now. When that next wave hits, most people won't be ready for how fast it moves. XRP's history has shown that when it runs, it runs. It doesn't give you time to think. It doesn't give you a perfect entry. It just takes off. And the only ones who benefit are those who already had conviction before the move started. That's why these moments of fear, uncertainty, and doubt are so powerful. They filter out the noise and give the biggest opportunities to the ones who can stay grounded in the data. Because when you look at the fundamentals, liquidity turning, institutional adoption, tokenization expanding, it's clear that XRP isn't just another altcoin chasing a narrative. It's the connective tissue of the next financial network. This next cycle isn't about hype, it's about integration. And the integration is already happening. Slowly, quietly, globally. By the time it's visible to everyone, it'll be too late to get in cheap. So as we move into the next few months, watch the liquidity metrics, watch the ETF approvals, Watch what BlackRock and Ripple are doing together. Those are the breadcrumbs that lead to the next major move. Because the same entities that control traditional finance are now building on crypto rails, and XRP is a cornerstone of that infrastructure. When the liquidity floodgates finally open and the US begins easing, we'll see capital reprice faster than anyone expects. Crypto will go from risk on to core allocation. That's how paradigm shifts work. They seem impossible right up until they're inevitable. And for XRP, inevitability is getting closer by the day. This is how financial revolutions unfold, first slowly, then all at once. When the tokenization wave goes mainstream, the entire world will finally understand what early XRP investors have been saying for years. Instant settlement, global liquidity, fractionalized ownership. These aren't concepts anymore. They're the new language of money. That's why now is the time to be informed, positioned, and strategic. Because when this wave hits, it won't just reward luck. It'll reward preparation. And if you want to prepare the right way, to actually understand how the top 1% are positioning themselves for this next wealth cycle around XRP, then you need to study the framework they're using. That's exactly what's inside the XRP Millionaire Blueprint, a complete guide that includes a detailed document, an infographic, a video, and more, all built to help you move smarter, with confidence, as this new financial era unfolds. You'll find the XRP Millionaire Blueprint linked right now in the pinned comment below this video.